Recording. All right, so just kind of coming back, obviously going to the weekly time frame on dollar index to give us an idea of where we're at. So last week
Mhm.
I wanted to see consequent. I kind of marked out this level of consequent encroachment, which was
Mhm.
that middle part of that 50% of the wick. And again, why we measure that is because the algorithm is this in this week's price action, right? This is going to be the division between your discount and your premium level. And
Mhm.
so, whenever the price kind of fails to break that previous long wick or big wick's consequent encroachment, it's kind of a telltale sign that we might not telltale, but it's kind of like something you note down that price might be reversing or it might be a deeper retrace, right? And so I wanted to see at least for forex pairs, I wanted to see price break past this before I bought, and we're kind of still in the same position. I figured we probably would consolidate between, this high, this consequent encroachment, and the low of this previous wick. And I didn't even measure this out, but I just eyeballing this, it
That
looks,
looks pretty good.
yeah, it looks like we're just shy of that consequent encroachment too. So we're just kind of trading back and forth in this consolidation, these long wicks. If you're kind of looking at it, we're grabbing buy side up here. We came back down here, grab sell side, and we're kind of just trading. So I'm kind of in the same boat as in last week as far as like for forex pairs. I want to see that consequent encroachment level. I think it's this wick right here. I want to see that taken out before we kind of start looking for buys again. And if I'm being aggressive, right, I think you could probably I think we're probably good here. I think we could probably start to look for buys here. But just because we're in an overall consolidated range on that weekly, that we might dip down below here and grab sell side and then kind of go back up. Overall, this is just kind of like a consolidated range. The one call I did have though kind of played out. So if you were looking for buy setups last week, then um trading into this fair value gap and taking that buy position, you would have caught. Well, I guess you wouldn't have traded it up based off this, but when we pull up Euro and GBP, uh, you can kind of see this. There was like one or two opportunities to buy
Mhm.
last week, but not a whole lot. Just really just kind of a major consolidated range. So again, just because we traded into this fair value gap, we didn't really take off. I wouldn't be surprised if we came back down. I'm still bullish, but I'm kind of thinking about like where's the money at in this scenario, right? So these relative equal lows are right here. So I wouldn't be surprised if we came back down here, kind of grabbed liquidity underneath these lows and then
Mhm.
took off and then kept going up. So overall, like I said, I'm still bullish. But I just because where the market's at, this is just a huge consolidated range. And a lot of times in this range, you're either going to be, kind of framing out short-term targets or just stay out of the market altogether. And usually for me, if I can't frame, um, if I have an idea of where I think the market's going to go. But I think just kind of based on everything structure wise, we don't really, again, we don't call tops on uptrends. We don't call bottoms on downtrends. So until this really breaks structure and start going the other way, we still kind of stick with our bullish bias. And I also think just kind of like geopolitically where we're at, there's a
Mhm.
lot of stuff going on that's not really going to lend itself to a the dollar decreasing right now, right? Just like think about all the political stuff and all the interest rate stuff. It's just, you
That previous chart you had, was that an hour chart? This is a
know,
daily. Yeah,
this is the
daily.
weekly.
Oh,
This
this
is
is a weekly.
right. Yep. And then this is
Weekly.
the
That
daily.
was it. Okay, that's a daily. So actually, it kind of looks like you got a little bull flag right there.
Yeah, yeah. And so with that though, you do have a bull flag, but I'm also kind of looking more instead of like looking at those chart patterns, I'm looking more for where liquidity's at.
Mhm.
And so like I'm just kind of looking for stuff that's obvious that kind of jumps out that might be seen as support resistance or
Yeah,
even
which
bound.
I like a lot better than chart patterns.
Yeah, it just frames it. I mean, it's more logical, right? Like it's
Mhm.
more like where, instead of a chart pattern which can fail or won't fail, might fail, that type of idea. So if you're thinking like, okay, we're starting the week out, people are seeing this as as a dip to buy long, which I still think it is too. Just be kind of based on the higher time frame stuff. I think we're trading, to an area of liquidity where
Mhm.
we might, see some higher prices. But if we had to grab liquidity to go long, where's the liquidity at? Well, there's this fair value gap right here, which we traded into a couple times and kind of consolidated. So we know there's going to be a bunch of sell side sitting underneath these lows. We know there's going to be sell side sitting here. So I wouldn't be surprised if we came back down here or came back in here to start the week off. Maybe even as low as this fair value gap down here that we haven't retraced, we haven't hit. So somewhere in this range, I think where it's kind of the same thing where we're going to bounce back down and grab that and continue to go higher and distribute that.
Well, tell me,
So
when does this dollar start trading? Is it start at 5 o'clock today, like the forex?
this might be the.
Is that the opening candle right there?
Oh, that's a great question.
Because it's
Uh,
5:04 my time right now.
yeah, it's not the weekly candle, but this is also a certain broker too. Yeah, does it say that's the 20th too? Yeah, it should start trading the same time as
Okay.
uh as the rest of the forex pairs, but I wouldn't be surprised if it's like delayed by an hour or something.
Okay.
I've never actually looked at the opening price on dollar, to be honest. Like I've always, because all my chart work is like done beforehand usually, and so like euro, this should be today's candle. Yeah, uh,
Yeah.
yeah.
So like I can't see that on your screen. It's too small.
Sorry, let me zoom
No,
in.
it's all right.
Yeah, this says Sundays. Yeah, this is today's candle right now. So,
Okay.
and there's a little gap there we'll talk about. So yeah, overall, like I'm still bullish on dollar. I want to see that weekly level, that higher time frame consequent encroachment level broken and traded above. And when I say broken, I want to see kind of like a daily close above it, very similar to like what I was talking about on Nasdaq last week. So if we get a daily close above this, then okay, I think kind of like the bullishness is on. It's letting me
Okay.
know that price is no longer one with that consequent encroachment.
So
We
you don't
also,
want to you don't want to see a wick above. You want to see a candle above,
if we get a
a candle
daily,
body rather.
yeah, if we get a daily close like on this time frame. Let me see. I'm gonna mark this out so we can see this wherever this is on the daily. So let me zoom back in. It's this line right here. So I want to see
Hmm.
like a strong daily close above this line.
Okay.
Once we see that, then I'll probably start. And we got really close to it. Well, I guess this was last Friday. Yeah, see how each daily price is respecting
Hmm.
that encroachment. So when we get that over that, then I'll be really confident that the uptrend is going to continue. Until then, we're kind of just in this consolidated range. We know that anytime you see consolidation, what happens? Well, there's an overextended run to grab some type of sell side before it continues on up. So, um, and that's why I'm looking here, or even as low as this fair value gap down here, to
Hmm.
see price come down here, grab that, and continue to go up. Because all the
Okay.
orders, again, thinking logically, and where's everybody's stop losses at right now? Well, they're probably right here, probably right there, and probably in this gap too, right? Because it's untouched orders already.
Hmm.
So coming into there, triggering them in, and then taking them up there past this line is where I'm looking at. Um, so that's euro or that's dollar. So bullish bias on dollar overall. Uh, Euro is really interesting right now because it's basically doing the same thing as uh GBP is, but it's being a lot more violent. Um, so coming the last few weeks, obviously this fair value gap right here, and I marked the same thing here. All of these pairs really had consequent encroachment being respected. So we had traded into this fair value gap right here. And sorry, I guess the price level, I guess I'll call that when we go down to the thing. But so we had this consequent encroachment respected at looks like 1.0, well, yeah, 1.0507. And so what I want to see again is very similar to dollar is once we get a daily close below that level at 1.0506, then I'll feel more confident that this downtrend is going to continue. But you can see last week or 2 weeks ago we respected this consequent encroachment level. We traded back into this weekly fair value gap and closed the week like this. Um, which again Yeah, it's crazy how we're ending with these prices. So like that's that consequent encroachment level of this
That's
week.
incredible. Yeah.
Yeah, it's that's I'm trying to tell everybody, man, it's algorithmic. Like this stuff is pre-planned every week. So yeah, so like we can see price traded back into that range. And so really what I would like to see is price continue to roll over and really break past this whatever level this is, that again that 1.0506 level, which is our consequent encroachment on that wick. Um so if I go down to the daily time frame, let me get rid of this. Oops, it's messy. Um yeah, so what this level, I think that's what our level is right there. Go back up to the weekly. Wait. Oh, I guess it did stop shy of it. It just wasn't really on it. So I want to see price break below that level. It's not 1 point. I'm reading the
That's
wrong.
halfway. It doesn't look like it's halfway, does it?
Yeah, why does it not look like
It
that?
looks a lot lower than halfway.
That's halfway though. That's the 50%.
That's 50%. And you are going, you're going from this black candle with the long wick, right?
Looking at, yeah, this yeah, this level.
Yeah, it's,
Oh,
it
oh
just
no,
doesn't
it's
look
not. There you
50%, does it?
go. Not there. That's why. There we go.
Oh, okay. There you go. Now that looks like
Okay,
50%.
yeah, there you go. So I had it measured wrong. So yeah, so
You gotta knock that one black line out that you made then.
yeah, yeah. So this,
There you
yeah,
go.
this level right there. Again, that one, it's like 1 point.
Yeah, because that 50% was right at the very, right there, right where you are
Yeah,
right now.
it's
Yep,
that
that's
that
where it
low
was.
1.0, 1.0507. So let me take that line and move it here. Make that visible. It's visible on time. It's cool. So going on to the daily, that's this line right here. So I
Mhm.
want to see it and see again coming into Friday, see how we traded into this, traded just below it, they're just above it, I'm sorry. And really been respecting that line. And so what I wanted to see is there's a couple levels I think I had drawn out on the 4 hour, but ultimately I thought like the big gap that I wanted to see respected was this daily 4 hour, I'm sorry, this daily fair value gap, and really
Mhm.
seeing it respected. And so we traded outside of this gap, but I'm kind of seeing if we just narrowly outside of it. I want to see if we've rolled over, if we roll over this week. So that's what I want to see happen to kind of continue this idea of the downtrend. I think if we take out this level, and really, it's really interesting because we're sitting in between like basically 250% levels of long wicks. I think if we trade above this fair value gap, um, and really break this consequent encroachment up here, I would be more inclined to think that we're going to continue to go up. And I would also want to see that line up with the dollar kind of starting to trend lower as well. Um, and then if we take out this low, then we're going to probably continue on with the downtrend. So that's kind of what I'm looking at for both
Where
of them.
is the consequent? Go back to that other chart. I think that was your daily.
Yeah, the weekly right
Where
here.
is the consequent encroachment right here on this, on the second candle, the white candle right there, that one. Yeah.
Yeah, literally.
And look, the black candle stopped right at it.
Yeah, it's like I said, man, it's algorithmic. It's the reason why me being someone that has never worked in finance, like professionally, I guess, outside of like day trading, can sit here and call stuff that's happening with trillions of dollars in the market, right? Because this stuff is completely controlled. Um, so yeah, so what I would like to see, I would like to see this continue to roll over and go short. That's kind of just kind of where we're at with the grand scheme of things. If you think about this entire trend run, this is the first order block that we've seen in this entire trend run, right here. And this was like 13 weeks into it, or 13 or 14 weeks of just straight downtrending. So and this is the first fair value gap in this entire run, I think, as well.
Mhm.
So like it's my kind of like inclination that we would continue to go lower, especially since like there's some stuff here. And then again, just I don't frame a whole lot of stuff geopolitically, but I know that the market makers use those events you
Mhm.
know, war in Israel and like all that and the inflation, all that stuff like that to take prices manually lower. And so I wouldn't be surprised if we're here before the end of the year, like in this, it's a little bit outside of the lines, but this imbalance digging deeper into here before the end of the year. Um, so that it's just my belief that, but if we start trading over this high, um, and then really respect this and this fair value gap as an inverse fair value gap, meaning that
Mhm.
price breaks this 50% encroachment, trades up, and then retest this gap and we start respecting it, then I would probably lean towards higher prices. But until then, still bearish, but this is just an overall consolidation. Um, Going to the daily time frame, again, same thing. Price see how these candle wick bodies each day was really respecting that weekly 50% level of that wick. We traded
Mhm.
above it once, closed below it, and then Friday was a close, obviously directly on it. Um, so again, I would like to see this continue to roll over and go short, like maybe today or tomorrow, trade maybe a little bit higher, and we'll break this down to a 4 hour. See if there's any type of imbalances in here that maybe we could trade into and then go lower. Uh, there's that main one which we were kind of digging into. Nothing really crazy on this time frame. Yeah, nothing really crazy here either. I mean,
Well,
the only thing I see. Oh, go ahead.
back there on the daily, uh, not the daily, excuse me. Was it the daily? Let's see.
4 hour.
Bring it up. It might have been the hourly. Bring
So
that daily up and let me look at that real quick. Uh,
yeah, hold on one second. I don't know what I just did. Yeah, yeah, there we go. Yeah. This one, or was it a little bit
yeah,
lower?
no, that was it because you have that pink fair value gap right there. You've got one, two, three, four. You got four candles that have actually traded, and this is the daily, isn't it?
Yeah.
Yeah, it is a daily. You've got four candles that have traded in that last week. Is that fair value gap still of any consequence now? I mean, since we've had so much trading in it.
Yeah, so I would still consider this valid. I would want to see it's still valid.
Okay, that's
Um,
what I wanted to know. With so
yeah,
much trading going on inside of it.
it's still valid. I would want to see this like I said, continue to fall over. One thing that is a little just noteworthy is that it looks like on Friday's price action, we traded into it and rejected it once
Mhm.
we broke out of it. So that's something we're noting here, but we're also basically bouncing back and forth between this fair value gap and then this 50% consequent encroachment. I'm just gonna label this so I don't forget.
Well, look to the left. The next large white candle to the left, it's got four, was it six black candles over it. Got a large white candle and a small white candle to the right of it. That's another fair value gap right there. Is that gap still of any consequence, or do you think that's played out?
Right here, you're saying? Is
No,
that
no. Come down to your right a little bit more, right there. That one, that fair value gap right there,
yeah, it is. It is actually. Um,
right there. There you
you'd think I would know the rectangle thing by now, right?
go.
Um,
Yeah, that's one. It like if you think that
yeah,
one's
it actually is like
valid.
yeah, it actually is. This is kind of like what you would call an inverse fair value gap, where in theory this is a SIBI, so it's supposed to trade up into it and reject, and so
Hmm.
it failed, right? And so when it trades back into it, this is almost seen as support, right? Like your
Right.
classical support. So we're kind of just in the middle of a lot of stuff, and this is kind of why I don't want to trade. I probably won't even look at forex this week, like as actually like when I'm sitting to take a trade, because there's just a lot of stuff that like I don't want to like I could take a guess. Like I said, I think that prices are going to continue to go to the downside just because of some of the higher time frame stuff we talked about. Like that's the first fair value gap. That's the first order block in the run.
Hmm.
Like geopolitically, we're no different in like the like economy wise or uh like we're pretty much in the same condition that we were like from a geopolitical standpoint that caused this whole run. There's nothing that's really changed to make that change like structurally.
Mhm.
Um, so that's the stuff that I'm kind of leaning on. That's like telling me, okay, we should probably continue to go lower. But again, like this is basically just a big balanced price range or consolidated range. So like
Right.
I can't say for certain that it's gonna happen. And I like stuff that's like pretty cut and dry. So that's why I'm kind of like wait and see like this level or this level, like whatever breaks out. I don't want to say, yeah, whatever kind of like breaks out and gets a sustained run either over that weekly fair value gap or kind of breaks that consequent encroachment. It's just going to give me a better idea of what market's doing. So I'm watching this, but then like when Tuesday comes around and I actually step into it, like actually looking to trade, I won't be looking to actually take positions in forex until something like that happens. Otherwise, I'm just gambling, and it's like it's not high probability. So like, why do that?
Okay.
Um, so if you're just trade, I guess for you specifically, like since you're just trading forex, this
To
might just
begin with,
be
yeah,
like
to begin with.
well, yeah, to begin with, then this might be just a week where I mean, because this could take a couple of days. This might not happen today. It could happen through, I mean, it'll probably be resorted out this week, but there's for you, it might just be like with the first couple of days of the week is a wait and see day.
Mhm.
We're just kind of figuring stuff out. Um, but ideally, I'd like to see, and even as I'm looking at like the 4 hour, the 15 minute, I'd like to see some type of like run to grab buy side, whether there's really no imbalance, but it would usually be like an imbalance or a high. And
Mhm.
so the only thing that I can really kind of call is we know that there's going to be some buy side sitting over this high, and this is just really prominent. So if I had to guess, and again, since I'm saying stuff like that, that means that I'm not 100% confident, so I won't be taking positions on it. If I had to guess, grabbing the buy side over this high, because we know there's going to be orders sitting above here. So I would want to see something like that because we look left, there's a very small imbalance right here that I don't think we traded into.
Mhm.
Yeah, there was just a lot of liquidity built up there, and I think
And
maybe
what's the date on that one?
yeah,
Back
sorry,
a bit.
I call these levels. This is October 12th.
Oh, okay, it's only last week.
Yeah, it's last week. Well, about a week, yeah, about a week, almost coming up on 2 weeks ago.
Yeah.
And it's the fair value gap on the 15-minute time frame. It looks like it's at 1.0627 is where it starts. And it goes up to
Mhm.
1.0630. Um, so if I zoom out, it looks like we haven't traded into that. So that's
No.
the only, I'm just gonna drag it across. So the buy side sitting here, and then the fair value gap right there. Let me zoom in, just get that correct. Yeah, that's the only like liquidity that I can see, even breaking it down, that we might reach for. And obviously, you got this high right here, but this high right there, the buy side that's sitting in that civvy right there. That's the only thing that I would want to, where I can really kind of make out that the market might be reaching for to grab, trigger in, and then fall over.
Mhm.
It could just, I mean, we could, get into London tonight, and the market just might just tank, right? And so like if that happens, then it's definitely a hands off situation, right? Like you don't really have a reason. Um, you don't really have a reason. I mean, we have a higher time frame reason why it's falling because it traded into that fair value gap on the weekly. But if I can't see it, grab liquidity and really see the consolidation manipulation, or sorry, the accumulation manipulation distribution and what it's reaching for, then I wouldn't trade it. And definitely not really looking to trade it until we kind of break below this low because we could just bounce back and forth between these lows and highs because all of this is really just higher time frame consolidation. Um, so that's what I would be looking for. I want to see if we're going to continue to go lower. I want to see some type of buy side get hit and match this buy side that's sitting above this high, maybe
Mhm.
this gap. maybe even as high as here, and you match it up with the sellers that'll be under these lows. Um, so that's what I would be looking for on Euro. GBP is it's a little cleaner as what we could be aiming for. And obviously these pairs are correlated. So even though has been acting violently, like it had to trade all inside of its fair value gap and it was trading outside of it. What kind of another reason I think the prices are still going to go short on this is because on GBP, we haven't even traded into the fair value gap yet. So we can see that there's been a lot of it was consolidating, but it's consolidating lower. So I think the run on GBP is going to be, I mean, very similar to what I drew out here last week. I
Okay,
think.
Blake, you just froze.
Oh, can you hear me? Sorry. Is my computer froze? Can you hear me or
Yeah, you
no?
froze for a second. Yeah, I was saying that that big white candle, I think there's a consequent encroachment right there on that one, a 50% mark.
Are you looking weekly? Or are you looking at?
So you have the daily up right now.
Yeah, yeah,
So
yeah.
yeah.
Saying where right?
Yeah, right there, that candle. I think if you go into weekly, I bet you that's got a big wick.
Yeah, yeah, yeah. Let me see.
Yep,
Uh,
there it is. There's that big wick.
yeah, it's the same. I mean, it's crazy because very rarely do you see this like play out like the consequence encroachment across all these pairs at the same time.
Mhm.
I think it's just shy. Yeah. But see, like, so it doesn't have to sit exactly on it. It just needs to be shy of it.
Yeah.
Um, so same thing here, like last week. I think this is today. So
Mhm.
like they've all respected it, this 50% level. So that's kind of letting me know. And then even trading up here, it's the same thing. It just didn't go to the exact level, but as long as it's staying underneath it, then it's noteworthy. Um, so it's a little not as clear as or not as like wow, this is crazy as euro and dollar indexes, but just noteworthy. So this zone right here is where we're looking at.
Mhm.
So obviously, just like I drew out here, I want to see this fair value get hit just because it's been formed. It's pretty open liquidity. It falls in line with our daily bias as well, just kind of trading higher. And so a lot of times what you'll see is like when one market is kind of reached for its ultimate its level that it's gonna get held at. A lot of times you might even see like euro get held, right? And like euro might not even really just be it might have like a move that's like 5 pips up on euro, but it'll be like 40 pips up on GBP. And that's just them holding a pair before they ultimately reverse it. It's that convergence that we talked about. Like I think we talked about it on the indexes, but um just really like whenever you see a level get held on one pair that's correlated with another pair, with that secondary pair is moving very rapidly, it's just a liquidity grab a lot of the time. And it's signaling that they might, there's no more money to grab on euro, but there's still some money that they want to trigger in and grab on GBP. So ideally, again, trading into this imbalance is what I want to see. Also, if you look here, relative equal lows. So I would like to see this play out, and then I'll be looking. Honestly, I'll drag that a little lower. I'll be looking at the sell side for here to get hit, and
Mhm.
then obviously continue on with the overall downtrend. I think I had this marked because this is consequent encroachment on the higher time frame, but yeah, this level I'm looking specifically at these lows at 1.20999. Um, so I'll just mark that there. And then looking to continue stuff lower there. Again, I wouldn't personally take a trade. This setup is a little bit better because I think this is the consequent encroachment level. And so these lows are obviously underneath that. Um, so if you are looking to take a trade, maybe GBP might be the one you want to look
Mhm.
at for this week. But again, you could probably take the trade when it hits this level. And I know there's a couple people that I know that trade exactly like this, and I know they're gonna be looking to sell this as soon as it gets in here. It's just for me, where we're at, especially with everything kind of in consolidation. I want to see monthly. Yeah, I definitely want to see consequent encouragement broken before I enter into a position, just because you could whip back and forth. And so I don't want to see that happen. I don't want to get caught in that. Um, so that's what I'm looking for. And then I'll just hit on NASDAQ real quick. And I know you're not trading NASDAQ
No, but I
specific.
want to learn it. I want to learn it because what I'm going to do is I saw your text last week. Since I'm going to be hunting in at the end of this month and then the first week in Montana, I am going to actually start demo trading probably when I get back from Montana, which is going to be about the second week of November.
Okay.
And so that's when I'll start demo trading. I won't be able to do it for the entire month because I'll be gone.
Gotcha. Okay. Yeah. Yeah. I mean, and that's what I was gonna say is like, definitely, even if you're just doing like the chart breakdowns and you're like, hey, like, uh, same stuff that I draw on the higher time frames. Okay, I think price is gonna flow here.
Mhm.
It's just good practice from you eventually do, start trading that. And for me, like I said, for me personally, like the last month I've been trading more Forex, but like really I'm going to be trading a lot. I mean, I've pretty much this entire year I've been taking more Nasdaq positions and more index positions, but it's a lot quicker. And it just moves a lot more solidly, professionally. And then obviously there's more regulation behind the stuff too, because these markets are a little bit more regulated than Forex are.
Mhm.
Um, so okay, so yeah, so weekly time frame on Nasdaq. Uh, so what I wanted to see over the past couple weeks, obviously we have been trading inside of this fair value gap. Let me get rid of this. So we have been trading inside of this fair value gap, and even kind of noting this inverse and fair value gap right here. Let me see. Actually, I have a different. There we go. It's a little bit cleaner. So we have been trading inside this fair value gap for the last couple weeks, one, two, and then obviously last week was the third week inside this gap. I wanted to see this roll over. I wasn't 100% confident based on this alone. But when I went to US 30, and I'll pull that up in a second, obviously
Mhm.
they're going to be correlated. So you always want to look at your correlated pairs to see what they're doing. And the setup was really clean. It was really clean on the S&P and the US 30, which is Dow Jones. So wanted to see this break a little bit lower and kind of reject that fair value gap. We didn't really get that until late in the week, like Thursday, I think. Yeah, we were trading that range to like Thursday. One of the things that I was looking at last week, again, consequent encroachment is like the word of the week. I wanted to see, um, let me hear this. I wanted to see consequent encroachment of this wick respected. And so let me zoom in, get rid of that. Yeah, weekly. So the consequent encroachment line is right here. This 50% line. So let me get rid of that. And so you can see there was a portion of last week where we were trading above this line. And I just
Mhm.
wanted to see a daily close below it. I figured if we get a daily close below that line, it's kind of respecting. And then obviously that 50% lines up exactly with the top of that fair value gap, just looks like it's just a little shy. But it respects that fair value gap completely. And so if we got that, then I was going to look for sell side or selling opportunities because I thought we were pretty much there. Um, so this was last Tuesday, so we got that close underneath. So coming into Wednesday,
Mhm.
I really was looking for sell side opportunities, and so I called this level out. This was the level that I marked at the beginning of the week. It was at 14,000 14,443. And that was kind of like what I was aiming for. Cause,
Mhm.
if we're moving lower, we're either gonna, fill in imbalance or take out a low, for the sell side liquidity underneath. And so these relative equal lows, I figured, okay, we're gonna probably hit this at some point. And so even when we were trading up here, I was like, if it just respects this, we're gonna definitely take this out. And this fair value gap, which I think I've been calling this, honestly, I might have been calling this since the summit. um, but this level here is like where I wanted to see price get hit and taken out at.
Mhm.
So that's long term. But going down to the daily, we got that close underneath consequent encroachment. And so we gave us 1, 2, 3, pretty much consecutive days of selling, aiming for those relative equal lows at again 14,442. So we're almost there. So what I want to see happen this week is this, we created a couple of imbalances here. This fair value gap right there. There's a couple of things that could happen, and I will know what happens by Tuesday. So it's why I'm not, I don't trade on Mondays because it kind of just gives me the frame of reference for the week. So there's a fair value gap right there. I want to see, in the best case scenario, I want to see price retrace into that and then
Mhm.
go lower. Now we ended Friday with this really just oops. We ended Friday with why is this? Uh, we ended Friday with this really huge, bullish or bearish momentum, just really
Mhm.
rapid. I wouldn't be surprised if we opened up and we just ran straight for that on Monday. If that happens, then I'm just gonna miss it. I'm not gonna complain about that. But if we start retracing, technically, this candle will form the lower half of a secondary fair value gap. So
Mhm.
there's an opportunity for price to trade back up into this over the first couple of days, then maybe Tuesday, Wednesday, reach into this gap and then really fall rapidly. We've also been just kind of thinking logically. Sheesh, Blake. Just thinking logically, we've also traded into this. We've been inside this fair value gap for like 2 weeks. Um, so that might be why we're just getting such a rapid decrease in price for this because we've just really accumulated all these orders in here, just really running straight for that sell side and those sell side orders. Um, so again, I'm gonna play the first couple of the days of the week like this. If we get a pullback, then I'm gonna be looking to be a seller somewhere in this fair value gap. And if we don't, um, and it's just a rapid run for this, then maybe I'll be looking at a secondary fair value gap that's formed between Thursday and wherever price ends, like the high of the day for Monday, and look to kind of trade back into that range and then continue to go short. But we're definitely bearish. And there's no there's no doubt about it. I think this is the ultimate target that we're running to, this blue fair value gap that starts at 4,227. And like if you listen to like a lot of the talking heads or even people that trade like traditional retail concepts, even they're starting to be bearish on it. And usually that's kind of like the final confirmation that when they call it like dumb money, right? So like smart money would be like the people that are selling up here because they see it happening. Dumb money are the people that are waiting till the price really is it's very apparent that we're in a downtrend. And so even when dumb money is even calling for it, that's when it's kind of like either A, the trend is about to end, or B, um, it's very apparent to everybody where the market is going. And so like
Mhm.
smart money, the hedge funds, the banks, the institutions, the intrabanks that are moving price, like the algorithm, the market makers, all those guys, they're selling here and they're looking to buy back, either here, or at a lower price. So um when everybody's screaming it's going down, then that's when you got to really be careful.
Mhm.
Uh, So, and everybody's starting to scream that it's going down. So I wouldn't be surprised if we go down a little bit to here, and then, you know, bounce out of somewhere in this gap. I think that's where we might consolidate. It might be a longer term, trend or a longer term, consolidation somewhere in this range. And then maybe it'll even keep going down. The other thing that I wanted to call out to is this that's kind of
Mhm.
been forming. And so we talked about that concept of trend line liquidity. Um, and so whenever you can very apparently put a trend line forming here, or I'm sorry, put a trend line behind, market price action, and it's very, very apparent. we know that above each of these highs is going to be liquidity, right? People are going to sell these bounces off of this trend line. So I wouldn't be surprised at some point that we come back up here and take this out. I don't think it'll be till after we hit here at least, but that's just something I'm keeping my eye on. I'm not really, I think that's at least, that's weeks down the line, like something that's way far out. I'm more concerned about the price action, taking out these relative equal lows and this sell side here, but I am just making note that we did form like a very, very perfect trend line. So there's going to be a lot of liquidity sitting up here. A lot of people will sell orders or buy stops above these highs, and buy side liquidity. So that's just, something I'm thinking about, which might affect us once we get down here. But as of right now, like I'm thinking that. So like I'm pretty much bearish. And again, the levels are going to be 14,445, I think that looks like.
Mhm.
And this if we just get a really, really rapid run, then I'll be looking to sell off until 14,217. So I'll be looking for short opportunities. So that'll be, pretty much every day looking for shorting opportunities in line with that 830 setup that I taught you guys, taking the high of the day. Uh,
Mhm.
and then riding it to at least to the 50% level of each day. Um so yeah, so that's Nasdaq. I think US 30 is going to be really similar to that.
Oh, it looks like it.
Yeah, it's very similar, but it was a lot cleaner. Why is this not? This is, it was a lot cleaner, and that's kind of what gave me like the inclination that we were going to continue to go down. So whereas we had one fair value gap on Nasdaq, we had two here. So those let me know that this is a very strong break of structure here. Um, if we go back to last week, we were trading here. I wanted to see this roll over. Obviously, if we go back to like the summit, when there's two fair value gaps, right? Even on intraday, we talked about this all the time. Like if we're trying to get our entries right, there's two fair value gaps. You'd enter here, plan for it to go into here, so your stop loss will be above this high.
Mhm.
Uh, this kind of gave us a weekly version of that here. So we traded into this. We just touched the bottom of that and then just fell apart. Um, so again, this is what I'm looking for. I'm looking for the first level I'm looking for is at for US 30 or Dow Jones, it's 33 or 32,805.
Mhm.
Uh, level that I'm looking at for sell side to get hit, just a very prominent wick with sell side. We also broke below this wick's consequent encroachment, I think, too. I didn't even look at that, but um, yeah, we're trading below it. So, and
Actually, you're trading into another fair value gap on the left.
yeah,
Keep
right
right
here.
there. You got it right there.
Yeah, I would say like just with this, I mean, with all of this,
Mhm.
kind of like um, we've worked pretty much this entire gap multiple times. I would think what's going to happen here is um, this might get treated as an inversion fair value gap, meaning I don't expect it to respect anything here. I think uh, I think when we break through, you might see us take sell side either at that low that I called out or this
Mhm.
low at 32,573. And then what's going to happen is we'll do something like this, maybe take this low, bounce back
Mhm.
up, and then run straight for these lows. So that's what I mean by an inversion. So this is a BISI, so this should be green. Um, so it should bounce off this and keep going up when it trades back in. And when it trades underneath it and retest it, that's a short. And so you should be looking for shorting opportunities on your smaller time frames. If you ever see this on the 1 minute time frame, sometimes you won't get that fair value gap entry that we look for. Sometimes
Mhm.
you'll get inverse. So you'll see something like this. That's a short. So if it breaks below a previous fair value gap, that should be going in the opposite direction. The minute it touches that, you could short that and then put your stops above, whatever the high was of this gap. So or that imbalance. Um, but yeah, so I think that may be what happens. Or we just run straight through. But either way, the levels that I'm looking at specifically are what is that? The levels that I'm looking at specifically are 30. The first one is going to be 32,616. The second one is going to be 32,600, 32,580. Um, so yeah, these two levels, and then ultimately this or these relative equal lows here, just really, really prominent. Um, you have all this consolidation in here, and these just random relative equal lows.
Mm-hmm.
And we're also sitting inside of a fair value gap right there.
Mm-hmm.
There's also a gap right there. And there's also a secondary fair value gap here. So there's a lot of liquidity in this area that probably is going to get matched or hit. So it's very similar to that big fair value gap that I was talking about on NASDAQ on the other pair. So I kind of expect, I'm just going to note all of this. And inside of that, you have this small fair value gap, that gap, and that also
Mm-hmm.
secondary fair value gap. So I would like to see like all this ran through. And so that means, I'm pretty much, since I'm looking for sell setups again, that 830 high, I'm looking to try and take the high of the day or something close to it. And then, look for shorting opportunities back to 50% each day. I probably won't swing. Um, I have a couple of people that I guess I consider like mentors. Um, that have been screaming that like just due to everything going on, this is like the really really good setting for like a quote unquote black swan event where just the markets just crash.
Mm-hmm.
Um, and so that's why I haven't really been trying to swing things. But normally, I guess whenever that happens or if that happens after that, I'll probably start swinging Euro USD and GBP USD, meaning that like I'll look for like the high of the week and probably just ride it out to the end of the week or ride it out for, you know, multiple day or multiple weeks or something like that. Really just kind of like look for one good entry each week and just kind of hang on to it until we hit target. Which can be really fun. Especially it's like it almost feels like more like your traditional investing because you're just looking for that one entry and then you're just kind of checking on stuff each day. Um, so that's probably what I'll eventually start doing on forex pairs. But again, I'm not really doing it just because there's a really really good potential for the market to just kind of completely fall over and crash, which might benefit me, right? It might be trading in my direction, but it also might not be. So I don't want to be holding stuff long term. So just in and out positions each day. I think I mentioned this a couple of times. I first started trading during Brexit, or right around that time.
Uh-huh.
The swings were like they were like 400 pips on a day. So like Euro moves like 60 or
Wow.
70 pips a day. And back during Brexit, it would just fall. Like the market would just open up and it would just be the normal, accumulation, manipulation, distribution, and then Euro would just tank 300 pips in a day. And I didn't know what was going on back then. I traded a totally different style. So I just thought like I put like a 0.25 or like a mini lot, two, I guess 25 mini lots down on a trade. And I thought I was a genius because I made $300 in like 2 minutes. And I really wasn't. I had no reference for what was going on politically.
Mm-hmm.
Uh, but yeah, you just watch the market just tank and tank and tank and tank. Like I don't think we might have some charts on here. I think this was it. Yeah, yeah. So like this was from June of 2014 ish
Mm-hmm.
all the way to yeah. So from here is June of 2014, and then about down here is March of 2015. So this is a year of just straight drop, and it fell like 3,000 pips
Good grief.
in a year. And so you could have swung this and just held it for a year, but I didn't have any context of what was going on back then, or even just how to read chart as a price action. But just every day was just 200 pips dropping, 200 pips each week is just red. So I think that like there's something like that could be happening pretty soon. And then also, this happened, kind of getting off track, but um, this also was something that happened like a long time ago too. It's on USDCHF, and I think it was right here in 2015. This is the monthly candle, right? So this high, this high is 1.0228. The low is this is like it is about I want to say it's like 1,000 pips. This is the monthly candle. This all happened in 1 minute.
In 1 month or 1 minute?
No, 1 minute. This is the monthly candle. I'm just showing you like how what it was. But
Uh-huh.
this all happened in 1 minute. It was a
One
news
minute.
release, and it just the whole market just tanked, right? And it just this is what I mean, like manual intervention. So sometimes the market makers will uh the algorithm is running, but sometimes the market makers will turn it off and just run to levels to clear liquidity. They ran below this low to take this out. And
Mhm.
then look right here, that low to that high trades it right into an old fair value gap from years prior, and it just cleared the boards. And anybody that had positions on here on any time frame, they could have been holding it for months. They could have been holding it for a year. They could have been holding it for a couple minutes. It just cleared the board, right? And so that's why I'm not holding positions right now, just because geopolitically, like we're in the climate where we could just wake up tomorrow and like Europe could be bombed and the euro just tanks 1,000 pips in 1 minute, right? So there's just like that's kind of why I'm not holding positions. But in a normal year where there's less inflation and less kind of like war talks
Mhm.
and that type of stuff, then I would probably look to swing and hold. Like each week that we've been calling lower prices, like I would look to like find a high of the week and then ride to the low of the week and then just keep doing that each week, or just um one trade that I would have traded like euro, I would have traded um I would have entered back up here and I would have just held for 13 weeks consistently. And like maybe I would have put like two or three standard lots here and just held for like 1,000 pips or whatever this fell and walked
Mhm.
away with like 30 grand.
Well,
And
what would, when you look at something like that, would you be looking at trading on the 1 hour or the 30 minute or what?
so I wouldn't get any lower because sometimes like I wouldn't be looking at intraday price action. I would only go as low as maybe like the 4 hour.
Okay.
Um and so like I would just be looking at this because if you look and see here, we really didn't have a sustained break of structure that wasn't trading back into a fair value gap. Here was like the first
Mhm.
time it happened, and here. So I'm looking at the daily. I'm really just looking at the daily to see the same way you'd manage a trade, like on the 5 minute or the 1 minute. Like, okay,
Mhm.
cool, we're forming order blocks, we're forming fair value gaps, we're getting lower lows. Is how I would be looking at price action each day. So like
Mhm.
this is just one day. So I would come in and say, okay, cool. Found a fair value gap here. We did this. Okay, let me check it back tomorrow and see what happened. Okay, cool. We traded away from that gap. Okay, let me see what happens on Monday and then the next week. And then I'm like, okay, cool. We're probably gonna trade back into here. So don't freak out if you start seeing your profit and loss go down when you're trading back into that. And
Mhm.
it just happened on a very slow time frame where everything is. And the beauty about that is I sleep through London most days. And so like I'm not even like most of me freaking out, I would be uh like I wouldn't even be awake for it.
Mhm.
So that's kind of the cool thing. But yeah, I would probably just be looking at intraday action. And so here I would have maybe freaked out a little bit initially. So at this point, maybe I would have jumped to the weekly and seen, okay, is there a fair value gap on this weekly time frame that we just broke structure for to get? And that's why we did. And I think that's what happened around that time. And
Mhm.
then once it continues to go down and reject, same thing, right? Or maybe I take a partial here and just, but I mean, this is hundreds of pips. So this is like, yeah.
And the nice part about it is that you can, as you're watching this over a 4 or 5 day, maybe even into a 1 or 2 or 3 week period, you can start moving your stop loss down so that it doesn't matter. You're still good. You've already made a lot of your profit and just keep riding it.
Exactly. I mean, this whole run was from this high to this low, I think is about 800 pips. So, I mean, you put one standard lot down, just one, that's $8,000 from July to October. And
Mhm.
then actually, two is 16, 3, 24, that type of stuff. So like that's a very, very low risk, like very, very low risk setup if you're trading with, very small amounts, like one lot, two lot. Like if you have like a $5,000 or $10,000 account, you can put one lot on a trade and just and put your stop losses above here on the daily and just let it ride out. Um, so it's very low risk, and it's also you're trading off the higher time frames, so it's more secure. And so as long as you don't freak out intraday because you're seeing stuff happen,
Mhm.
uh, you can. I mean, you could have took advantage of this whole move. That's something I would have done if I wasn't like very concerned about like all of this stuff with inflation and wars and all that
Mhm.
stuff.
Well, real quick, tell me, I've heard you mention it before, and I've heard a couple other people mention it. And to be honest with you, I never bothered to look it up. What is a black swan event?
Yeah, so a black swan event is just like it's really just the market crash. It's like the one.
Is it like what happened in October of 1988?
Yeah, yeah. So
Buddy,
like
I
it's
remember it. I don't know if you remember it. You were quite young then.
yeah, I'm 92, so I was a few years. It wasn't even a thought yet.
Oh gosh, it was before you were born.
Yeah, it was it
My wife
was
told me, you just started laughing.
yeah, I'm still a young guy out here. Well, I don't some days I feel young, but uh yeah, so a black swan event is really just like I feel like it might I don't even know where the term came from. I thought it might have been like a military thing, but it's really just like the one like the one in a million or the one every like generation type of event where it's like okay maybe we go to war with somebody or like there's something that happens geopolitically that makes the markets move and gives the market makers an excuse to take price wherever they want to take it, right? So like one of my mentors has been calling for price to hit this range too for like he's been calling it for a while too, but he thinks that it's going to get here in like a week. Like there's going to be some type of event that happens in the very near future that's going to just drag us down here. I don't know if that's going to happen. I don't know, but basically it's the idea of a black swan event. Like 9/11 would have been a black swan event, like or Pearl Harbor or maybe Hiroshima, not Hiroshima, but when in Japan when like the power plants blew up a couple of years ago, that really shook USDJPY. Um,
Okay.
like stuff like that, where it's like a geopolitical event that Brexit, right, is a black swan event. Like just
Well,
this,
yeah, and considering what's going on right now with Israel, it very well could be if Hezbollah gets into it. I mean, they're already into it with Hamas, and if Hezbollah gets into it, and then Iran wants to get into it, so that could definitely be one right there.
right, exactly. Like I'll say this, like during I don't Ukraine, right? So the markets tanked during Ukraine, like Euro crashed, and my friend, I'm really good friend. We've been trading together for years. He was in buy positions when Russia invaded Ukraine
Mhm.
and blew a $20,000 account, $20,000 or $3,000 in like like 10 minutes, not even 10
Oh
minutes.
man.
And so yeah, he was yeah, it hurt. That one hurt. He made it back. We made it, we got his money back, but it was rough. That was not a good day for him at all. But that type of stuff, like where it's like a war talks, and like you said, like Israel, like just due to allegiances, like if Iran steps in to back Hamas, right, and Iran could come with China or Russia back to them too, and we have to step in because we back Israel, right? So like
Right.
that could all that could lead to a war event that or just a random city in Europe, and like not like, it doesn't have to be like a big city. It could be like, as a random city in Germany gets bombed, right? That's going to cause the euro to tank.
Mhm.
So it's just, or someone, takes credit for it, that, it doesn't, whatever the circumstances is, like if something happens, like that could affect a country, it could affect the currency behind it.
Mhm.
Um, People have been predicting a recession, right? There's like most, like even company I work at, like they've brought market analysts in and they think that there's going to be a recession, like the soft one, that's going to start somewhere
Right.
around the holidays or right after the holidays.
Mhm.
So that stuff could trigger it too. So there's just a lot of stuff that's just kind of like stirring the pot for a one-off event where the market just tanks 2,000 pips in a day. And I don't really want to be in that type of event. And but usually when that happens, it's like the market's kind of good for like the next 10 years as far as like crazy
Mhm.
stuff. So
Well, just
that
let you know, the one in '88, I was actually working in a small town in southern Louisiana as a federal agent, and I
okay.
remember I came home and my wife said the market tanked today, and it tanked like 500 points, but that equaled 20% of the Dow back then,
Yeah.
and it was just a 500 point tank. Okay, and I don't remember what caused it. It was I remember it was October of 1988, and it was like a 400 or 500 point drop,
Yeah.
and it yeah, so that would definitely be a black swan event. They called
Yeah.
it was it Black Friday? I think it might have been on a Friday.
Friday. Yeah. I think that's what it was. I only know it because
Not
I've
sure.
watched like the Wolf of Wall Street a couple of times and they were talking about that. Like I guess he lost his money during that. Or it was very early in his like career, his stock career, the guy, Jordan Belfort, I think is who he was. And they talked about it in the movie, and that was like one of his like defining moments, and that's like what set him on his path was Black Friday. Uh,
Yep.
yeah, so yeah, it's so it's one of those things where it's just like, you want to stay out of it. COVID would have been another one. So like when COVID started going when tanking,
Yeah. Yeah. As a matter of fact, myself and my two boys, we actually did pretty good in COVID because we were out of the market, and the three of us each bought just one Amazon Leap,
mhm,
and I got out of my Amazon Leap at like $260,000, and Chris uh, kept going, and I kept telling Chris, "Look, man, you've made money. Get the hell out now." And
yeah,
his Leap actually went up to over 300,000, and he ended up getting out at like 220,000. So it went up and it started coming back down. He said, "To hell with it," and he got out. And
yeah,
my other boy did the same thing. So, and that was pure luck. I mean, that was dumb luck, and we were just starting to learn chart patterns at the time. But we got into Amazon, and Amazon went crazy because everybody was ordering everything.
yeah, yeah. I mean, Tesla did the same thing. It was
Yep,
like,
exactly.
but see, the thing about you though that was good though was that a lot of people they get the itch and they feel like they can. I mean, they do it one time, they feel like they made money and they got lucky and they usually give it right back. And
Mm-hmm.
I mean, like some of this stuff that like even I've been teaching, right? Like this takes months and years to even understand what's really going on and what really drives how the price goes up and down. Because
Yep.
it's not stuff that we're traditionally taught, one, and then even to get to the stuff that you're traditionally taught, most people don't even get that far. They just think, okay, it's going up, let me buy, and it's going down,
Mm-hmm.
let me sell.
Yep.
So most people don't even get to retail logic, and then this is even a step beyond that. So,
It
uh,
is.
so this is
Absolutely.
yeah, this was COVID, right? So like this was
Yeah.
and you can see like man, like I wasn't even trading with this style of trading back then, but a lot of lows, a lot of liquidity. We ran directly to those relative equal lows right there.
Mm-hmm.
Just shy of them, looks like actually. A lot of lows, a lot of liquidity that you could make the case. And actually, right here, it's a trend line.
Yep.
So, trend line liquidity sitting underneath those lows. So yeah, so I mean, like, there's a lot. I mean, I don't know. Like, there's learning how to trade like this has kind of made me like very wary of like, I don't know, just stuff that how stuff really works in the background. So there's a lot of stuff at play, obviously. So like, Yeah. So I mean, we're definitely in the black swan kind of category for stuff. So that's why I'm not holding. So I guess long story short, like in and out, and then whenever that event occurs and stuff goes back to normal, then maybe I'll start like swinging stuff. So those will be the fun trades where you take one trade and you just hold it for the week. And
Yeah, because personally, my trading style personally is I like swinging. I would much rather take a trade and sit back and let it run uh, than be on the computer every day looking for a trade and picking up something smaller. When I say smaller, I'm talking, between 50, because I'm gonna be honest with you, Blake, I'm not greedy. If I make 10, 15, 20 pips, buddy, I'm out of there.
yeah,
I'm happy, you know. It's
yeah,
I want nothing but ground balls. I'm not looking for a double or stand up triple or anything like that. I just want ground balls.
yeah. And it's because I mean, while you can trade like this, like the intraday scalping in and out,
Mhm.
I mean, I wouldn't say it's not I wouldn't say you're not meant to do it because obviously there's the same logic happens on the 1 minute chart that the monthly chart, right? So like all this
Right.
stuff happens. It's not like you can't do it. It's just it takes such a toll on your emotional psyche every single day.
Exactly.
Look,
Exactly.
it's like even with me, like I don't know if I ever like I'll be a swing trader at some point, and it'll be more towards with euro. I don't know if I'll ever start swinging like indexes. They just move pretty crazy, but
Hmm.
um like the forex pairs, I'll definitely be swing traders more. They're just a little more stable, and they're less prone to more daily like price swings.
Hmm.
Um, but I don't yeah, just the toll that it takes on you going into a chart every single day or even 2, 3 times a week, just looking for
Hmm.
positions, holding it, even when you know where it's going, it's still mentally a little mentally draining. So like I want to get to the point where I'm you know, I've got enough capital still, built up, whether it's a funded account or a personal account that I only have to take 2 trades a month. That's my goal is like I go in there and I'll intraday trade and maybe 2 trades and I'll have, some trades that I'm trading and then I just hold those. But I don't want to have to go in like 10, 20 days a week or 10, 20 days a month and just consistently have to look for a trade. So that's why I
Exactly.
was trying to tell everybody, like, man, if you can build up a funded account or if you can take those base hits, because if you can make $100 off of 15 pips, if you have the right size account, you can make $1 million off of 15 pips if you just,
Hmm.
so it's like you definitely have the right idea behind it, but it's hard to a lot of people it's hard to get that through their head because
I
especially
hate
our
to say it, I hate to say it, partner. It's a lot of young people. They
yeah,
want, you know, a lot of young people don't understand it in that your mom and dad didn't get to where they are overnight.